let's start with appraisal ratio. Okay. So appraisal ratio is being given by AR alpha by sigma of the error. So what that means is this is your excess return, and this is what you studied in your CFA level 2, which is S standard. What was that?
Standard error.
Standard error. Right now, I want to contrast my appraisal ratio with respect to information ratio. If you look at information ratio, that's also alpha, which is my excess return over the benchmark. Let's say RP minus RB. What I was doing there was sigma of RP minus RB. Right. So I am basically looking at the total volatility with respect to the benchmark. However, I am only looking at unsystematic risk over here. Unsystematic risk. Now, what does this mean? What I'm trying to understand from my appraisal ratio is that whatever the manager has did, look, the market gives you return for the risk that you take.
Yeah.
Right? So, and we say that effectively, if you do your things right, then you should be able to diversify away all your unsystematic risk.
Yeah.
Ideally, if given a chance, we say that if you invest into 30 different securities, you should be able to diversify away all your unsystematic risk.
Yeah.
So the market do not reward you for the unnecessary risk that you take, which is unsystematic risk, and for the systematic risk that you take, the market rewards you accordingly, because it lies on the efficient frontier. Now the idea here is that this sigma is the total standard deviation of both systematic and unsystematic. While trainer ratio explicitly handles my systematic risk, which is beta, my appraisal ratio captures the unsystematic risk, because this unsystematic risk is purely and purely because of the manager.
Yeah.
Right. If there is a risk, this risk is all because of the manager's overweight and underweight, or the good call or the bad call of his skill set. So appraisal ratio talks about that excess return, and it is being divided by the standard error, which is a component of your unsystematic risk only. Okay, make sense? Most of the cases, in case you get any questions to that, just one second. In most of the places, in most of the cases, in case you get a question on these things, straight away they'll give you the values, and you mostly have to plug in. Okay, so I'm just trying to recall if I got something. To be honest, I don't remember if I get a question on that. If I got a question on that while I was writing it, but in case you get it, acha, maybe you can get it in the afternoon exam, where it's so simple. They ask you, acha, haan, now I remember. They give you a question which is to compare the two things, or if there are two managers, one has a ratio of this, that one has a ratio of that. So you calculate the 2-3 numbers, and then you tell which manager is the best manager.
Okay. How do we do that? Like all say yes to be the best. Like
so what I'm saying is, so let's say they give you the portfolio return, right? And then they give you standard deviations, or you can calculate the standard deviation, and then they say that if this manager has given you this much return, that manager give you this much return, ABC 3 managers, then which manager is the best? So what you can do is you have to calculate the Sharpe ratio, and then the higher the Sharpe ratio, the better the manager is. Does it make sense? No?
Makes sense.
ठीक है, तो करना क्या होगा, बस वहां पे वो कैलकुलेट करना Sharpe ratio, which is easy, but they would want to test your skill set, that do you know that higher the Sharpe ratio, the better the manager is.
Yes.
The next one that they talk about is, this is covered, another one is capture ratio. Okay, ये थोड़ा interesting है. So let's say the market moves by 4%, and your manager, right? Your manager gives a return of 5%. So basically, I can say that my RB benchmark is 4%, while RP is 5%. So can I say that my upside capture ratio is 1.25, which has been given by 5/4.
So 5/, and RB is what the sorry, 4 is market movement or RB movement?
No, this is the return on the benchmark, because my manager is betting against the benchmark. Since my manager is betting against the benchmark, so if my benchmark is giving me 4% return and my manager is beating the benchmark, so can I say
Yeah.
that the upside capture ratio is 1.25?
Yeah.
Okay. Let's look at the other way around. Let's say the manager, the market has given me, or the benchmark is giving me -4% return, right? And not -4, but then let's just look at, if my portfolio manager, this is 4%, let's assume, and my manager has given me 2% return. My benchmark has given me 4% return, and my manager has given me 2% return. So can I say that my downside capture ratio is being given by 2/4?
Yeah.
0.5?
Yes.
Okay. Now, can I say that my capture ratio is equal to my upside capture ratio by downside capture ratio? So can I say this is going to 1.5 upon 0.5?
Yeah. What are these? These are points in time or what? Like how do you determine what the time period is for which you are calculating the upside? Is it the maximum it's gone to, that's how you're doing it, and the minimum it's gone to, is that how you're doing it?
Actually, the idea here is that we are not really trying to understand in which duration. I'm saying, let's say you take any period, let's say in 1 year period. For any 1 year period, your manager is giving you 5% return, while on the same period, the market is giving you 4% return.
Okay.
When I say market, basically means I'm referring to benchmark.
Okay.
Similarly, you have another scenario where your benchmark is giving you 4% return, while your manager is giving you 2% return.
Okay, so this is a
Right?
theoretical exercise.
Yeah, theoretical exercise.
Okay.
And then I can say that the capture ratio will be your upside capture ratio by downside capture ratio. Can you see that this value is more than 1?
Yeah.
This value is more than 1.
Yeah.
Now, what does that mean is, it means that it is positively asymmetric. Now, what does this positively asymmetric means? होगा ये, इसका मतलब ये होगा जब मार्केट से अच्छा परफॉर्मेंस आएगा, when the performance is better than the market, in that scenario the manager is performing way better than the market. But when there is a downside, when the market negatively performs, right? I could have used the negative signs over here as well, right? Both negative signs, so the it would not make an impact on negative values. So क्या मैं बोलूँगा कि market ने benchmark has performed -4 and my portfolio manager is given -6, so it does solve the same problem. It does do the same thing. ठीक है? So I'm saying, if the market, if my manager is performing better than the benchmark, it is performing way better than the benchmark. But if the market is negative, so my manager is not so negative. So basically, he's a good manager. There are 3 things. One thing is, either your capture ratio could be equal to 1, which means my manager is symmetric on both sides. If the market is positively behaving, or if the market is negatively behaving, आई एम गोइंग बाय द सेम रेशियो, जितना मुझे मार्केट के पॉजिटिव होने पे प्रॉफिट देगा उतना ही मार्केट के नेगेटिव होने पे मुझे लॉस मिलेगा. Does this
Yeah.
make sense? No?
No, it makes sense.
Right? A simple example could be, we did a 5 and 4, right? And I can also do that my market return, assume that my market return is in this case, let's say minus 5. Sorry, my portfolio return is minus 5 and my benchmark is minus 4. Right? So my minus 4 by minus 5 by minus 4 is equal to again 1.25. But that's on a downside. Although the ratio is positive, but this is on a downside capture ratio.
Yeah.
So my upside capture ratio is 1.25. My downside capture ratio is 1.25. Effectively, my capture ratio is equal to 1.
1. Yeah.
What they're trying to say is that if my capture ratio is more than 1, it means that it is positively asymmetric, and which means that my manager is performing good when there is an upside. ठीक है, more better than the downside. क्योंकि हम क्या चाहते हैं, अगर हम क्या चाहते हैं, अगर मेरा पोर्टफोलियो माइनस में जा रहा है, if it is going in negative, it is going in losses, then my losses should be minimized. But if the benchmark is positive and my manager is beating the benchmark, then it should beat the benchmark even better.
Yeah.
Not at the same ratio. So this capture ratio overall is just trying to make you understand how my manager is performing overall, both in the upside and the downside of the market. Okay. So the takeaway here is that the number greater than 1, the better the manager is. Is that okay?
Yeah.
All right. The last one that they have is, did you see in all of these situations, the higher the better, the higher the better, the higher the better, then the higher the better, the higher the better, the more than 1 the better, and we'll talk about the drawdowns. Okay. What is a drawdown? You might be knowing it. So basically, बहुत simple language में बताता हूँ. We're not going technical things. You saw a price of NBCC as 175, and then it started falling to 65. By the way, that's some real numbers. And then started off going up. Currently, it is around 115. But then, point is, it will reach till 175. So the point is, in how much time?
Okay.
In how much time does it recover to the same value?
I see.
Drawdown. Simple language. Achha, they use the word maximum drawdowns is because it started from 175, fell till 160, and then it improved to 162. ठीक है, तो ये कोई drawdown नहीं है.
Oh, okay.
Then from 162, I'm saying this is also a drawdown, but I'm saying what do you mean by maximum drawdown? And then from 162, are you saying something?
Oh no, I was just saying peak to trough.
Exactly. You got me right? तो होगा यही बस from peak जहाँ से भी होगा to the lowest point, that's the maximum, and then how much time does it take to recover? ठीक है? And let me also reconfirm this, but I'm sure the maximum drawdown is not from top to bottom, peak to trough, but also time that it takes to move from here back to here. It's a total. ठीक है? So just one second. Yeah. Can you see that? So January, the return is this. February, the return is negative. So I can assume that the price must have gone down, right? So negative, 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 negative. So यहाँ पे जाके वो positive हो गया.
Yeah.
Yeah. Now can you see that? From here, the drawdown started from here minus 2.55 and then 2.71 minus 4. तो यहाँ तक तो नीचे जा रहा है वो.
Yes.
तो maximum drawdown यहाँ तक आ गया. And then from here it started recovering. So when you got 2.18, the 2.18 return आया, but it has to reach to the same level, right? It has to reach to the original level. So
Okay.
what I'm trying to say is from 165 it went to 65. From 65 it became 70. So 70 does not mean that it reached 165. So, right? So for our reference, so they have given cumulative drawdown. So far the maximum drawdown is minus 15.56. So although the stock started recovering, you can see the positive return over here, but the maximum drawdown, which is minus 15%, should be recovered completely. So the more I got the positive returns, the more it decreases. Basically, the negative things become less negative, and finally it reached zero, which means I was able to reach my original price. That's how my accumulated drawdown is now zero. So that's my drawdown recovered. You see that? So effectively, you can say that if I start off with 165, I reached 165. Okay. Does it make sense? Yes.
Yes.
Totally.
Are
we going to proceed?
Yeah.
Okay. And lastly, in this book, they give you another thing, which something that we have already done. Okay. How they do it is they again say that finally we can do the attribution analysis, something that we did a lot.
Yeah.
Where we say that the total allocation effect is this and total selection effect is this, and they say selection plus interaction, and this is allocation. This number total will be the addition of this number and this number.
Correct.
And let's say you have to calculate 0.15%. How would you calculate 0.15?
WP, which is the weight of the portfolio, multiplied by return of portfolio minus return of benchmark.
Perfect. Okay. Let's say you want to calculate this number.
This depends, right? Which method we are using, BHP or BF.
Yeah. So very good, right? Remember, if nothing is given, you have to use the BF model, which was a later method, which is the right method to use.
Okay.
Right. So I taught you BHP and BF. So just remember that to use BF model, where the formula was WP minus WB, WP minus WB, and then multiplication of RB minus RB total.
Benchmark. RB total, yeah.
Yeah. And which you can call it over here as, let's say WP is your 15.
Yeah.
Sorry, हाँ wait, ठीक है, तो मैनेजर X है ना, तो 15 minus 19, WP minus WB multiplied RB.
Yeah, sorry.
RB is
7.65 minus 9.99.
Correct. ठीक है. So you will arrive at 0.09.
Yeah.
So we can see later that the total outperformance is actually underperformance. 0.32 minus 9.99. Okay, so there is an underperformance between these two numbers, and then we can call out that in the allocation कुछ नहीं उखाड़ पाया, selection में भी कुछ नहीं उखाड़ पाया, overall कहीं कुछ नहीं उखाड़ पाया. ठीक है?
Yeah.
But we can always say that I'm just quickly skimming this through, that if this is 9, this is 14, This is 11. So France has outperformed the benchmark, but he actually underweighted. तो गलत किया उसने, ठीक है? This is 12, मतलब basically this is 11%, this is 10%. So France has outperformed the benchmark. तो effectively उसको overweight करना चाहिए था फ्रांस को.
Yeah.
But उसने underweight किया, तो ये गलत है. और बाकी I think सब कुछ ही
Overweight.
नहीं, मतलब सब कुछ ही less than the वो है benchmark return. सबको underweight करना था effectively तो. बट इसने इसको अंडरवेट किया है, तो दिस इज राइट. बेल्जियम को ओवरवेट किया, दैट्स रॉन्ग. पोर्चुगल को ओवरवेट किया, दैट्स रॉन्ग. लक्समबर्ग को भी ओवरवेट किया, दैट इज आल्सो रॉन्ग. ठीक है ना? ठीक है, मतलब कुछ नहीं आता ऐसे. ठीक है. तो दिस इज समथिंग दैट वी नो एंड वी हैव डन दिस मल्टीपल टाइम्स नाउ. One another thing is, can you see this one? This is how they can give you a question where they say that, let's say there are 3 managers, manager X, Y, and Z, and this is the benchmark. Okay. Again, I also feel that they might not ask you to calculate these numbers because the CFA is not about the calculation. It is more about how you perceive and how you interpret the results. So they say the Sharpe ratio are these, trainer ratios are these, information ratios are these. Okay. Now, where do you think, which one do you think is the best manager?
Why?
Achha, before even solving, can you see that if the Sharpe ratio is more, the trainer ratio is also more? More as in with respect to X and Z. The information ratio is also more.
Yeah.
And then the Sortino ratio is also more. हालांकि Sortino ratio के बारे में हम बोल नहीं सकते उतना clearly, because there is no pattern, because it depends upon what value they are you using. ठीक है, as MER. Now, but without even solving anything, I know that Y is clearly the winner.
Yeah.
However, acha, one more thing is, if you look at return and standard deviation, no matter what return and standard deviations are, if you are given Sharpe ratio, use that information.
Meaning,
what I'm trying to say is that, let's say the return numbers look very fancy. Let's say 25% return. Okay. I'm sure the risk would also be higher or lower, I don't know. But I'm saying if they've given you Sharpe ratio, looking at return and standard deviation does not make sense, because Sharpe ratio also captures everything.
Yeah.
So as long as my Sharpe ratio is high, I'm good to go. ठीक है. तो यहाँ पे we can clearly see that Y is the best manager, followed by, this is 0.63, 0.61, 0.7, this, followed by X. Is that okay?
Yes.
Yeah. So this is first, this is second, this is third. Right? So you can अच्छा, एक और बात है, आउट परफॉर्मेंस तो ठीक है, विनर भी ठीक है, लेकिन देयर इज वन मोर थिंग इज कि in terms of skill set, मैनेजर X और मैनेजर Z का तो इंफॉर्मेशन रेशियो ही नेगेटिव है. नाउ व्हाट डज दैट मीन?
He's underperformed the benchmark.
Okay, that is easy to say, but then information ratio actually talks about the manager's skill set.
Okay.
क्योंकि information ratio is all about the active management and the active risk. ठीक है ना? इसका मतलब देखो, अगर मेरे सामने कोई 2 पोर्टफोलियो मैनेजर्स हैं, and if I have to find out which one is better or which one is great, I'm not going to look at my Sharpe ratio or trainer ratio. I'm actually going to look at the information ratio. And why is that so? Because information ratio captures RP minus RB, which is my active return, and then we divide by active risk, which is sigma of RP minus RB. So that RB, I have not defined it. RB itself is defined by the manager.
Got it.
आर यू गेटिंग माय पॉइंट? तो उसमें मैनेजर ये कह रहा है कि ये मेरा बेंचमार्क है, और अगर वो अपने ही बेंचमार्क को बीट नहीं कर पा रहा तो क्या करेगा वो? राइट? इसका मतलब जो भी वो कहता है कि ये मेरा स्टाइल है, मे बी स्मॉल कैप, मे बी लार्ज कैप, और मे बी व्हाट नॉट, राइट? जो भी उसका स्टाइल है, जो भी उसका आइडियोलॉजी है, जो भी उसका स्किल सेट है, he is not able to perform on those lines, and hence you have a negative value on sharp ratio. Sorry, on information ratio. Does it make sense now?
Yeah.
ठीक है? So any kind of active management, any kind of manager skill set that you're looking to see, you should refer to information ratio only. Are we good?
Yeah.
ठीक है. So I think that's all in this chapter. Let's proceed. All right. So the next one that we have is investment manager selection. If you look at it holistically, we have seen a lot and we have worked around a lot in terms of attribution, whether it is micro, whether it is macro, right? We talked about that from where the money is coming from, how it is coming from, if it is by luck or not by luck, what are the different what are the different quantitative things that we should look at to ensure that my manager is a good manager, or he's outperforming or underperforming the benchmark. But this topic is mainly on the qualitative measures.
Okay.
Okay. The point is that in this we are trying to say what are the different processes to identify the good manager, what are the different due diligences that we do, what things are we going to keep in mind, what are the different challenges that we could see, and how to go about selecting the right manager, and hence the name investment manager selection. Right? So they open up saying that due diligence is one of the most important thing that we should do when we select the manager. And because first that I need to know how much return is that portfolio manager is providing, which we saw in the last chapter. But the second point thing is, has he been performing consistently? मतलब I believe कि every manager would have earned 15-20% in some of the years. But the question is, has he been consistently outperforming, or how does his overall selection, his ideology works? Okay. So this topic is more about that how the manager has been performing consistently and what all due diligence should we do to ensure that we select the right manager. So they say something called as manager universe. Again, without even giving you any fancy term, I can tell you what this is in a simple language. First is, how would you go about selecting a manager? Is it right to say that first you would think, what exactly do I want to do?
Yeah.
मतलब अगर if you want to buy a phone, you need to know that you want to buy a good phone. Now, when I say that you want to buy a best phone or a good phone, the language that we use is we want to buy the best phone under 25,000. Want to buy the best phone under 75,000. But the thing is, the definition of best varies, obviously. On a 75,000 phone or 25,000 phone, somebody could have a focus on the camera, while somebody could have a focus on the processor. Somebody could say, okay, everything looks good, but the body is plastic. I don't want that. I want a metallic body. Or somebody is going to say that, okay, at least I want, some 4x AMOLED screen or something. Okay. So what I'm trying to say with this is, since every person as in the investor has a different view on how he looks at the manager as the best in the criteria. The important thing here is that he or she should have a view that he wants to get into all the managers of the style index. As I said, I'm trying to get something within 25,000. Nobody in the world Googles out best phone in the world. Nobody does that. Everybody says best phone within 20,000, best phone within 50,000, which means you have an idea that, okay, you want to invest, you want to experience 25, 20, 50,000, and within that range, you're looking for this. Similarly, when you look at the investment manager, you say that, okay, I'm looking for something that would be help me to invest into small cap. But let's just talk about all the different managers who invest into small caps. Right? Now, the point is that how would you go about doing this? You go to Flipkart, you go to Amazon, and then you look at all the different phones, and then you go and check their features. You go to YouTube and then see how their processor has worked. What do they say? Something called as I don't know, end to some timing, right, for gaming purposes. So
Sorry,
they
which
look at
one?
different. Sorry.
Which one? Which one
For
on gaming?
so for gaming purposes, they look at some time, right? They use some word oh, unto कुछ they use,
Okay.
मतलब मैं कई बार YouTube पे सुनता हूँ. So they look at this timings on how मतलब उसका temperature कितना ज़्यादा बढ़ रहा है नहीं बढ़ रहा है. So I'm
Okay.
saying basically they look at the reviews, right, and then they choose one of the phones.
I see.
We can understand this whole hierarchy.
Yeah.
But think about this. There are a couple of things. First, on the YouTube, let's say they only capture 3 phones of that range, but doesn't mean that in the market you only have those 3 phones in the range, or in the market within that range. Is that correct? Second, that when they tell you that this is a good phone, this is not a good phone, you are rely on their views and their expertise. That might not be right.
Yeah.
And thirdly, that maybe they just showed you that this is the processor, and I have I tried playing a game for 30 minutes and the temperature shot up to this. Maybe they were all paid reviews and they did not really play for 30 minutes. Right? So there's a lot of question marks. Now the same analogy goes over here when it comes to manager universe. Once you know that your theme is, let's say, the style which is large cap or small cap, analogous to 25,000, then you go and look for all the managers in the market that does it. Now, when you say you go in the market, you're not gonna go to Andheri.
Yeah.
Right? You will obviously Google it out.
Yeah.
Right? You will Google it out. You will look from different sources. You will check who are the different managers. But think about this. Maybe not all managers have marketed themselves. Right? Very similar to that there are people who are only reviewing those 3 phones doesn't mean that there are only 3 phones available in the market. Secondly, if somebody has collated all the data somewhere on a website on which you are referring to, maybe that data collation is not correct. Maybe that is biased. And maybe the returns that they have shown for different managers could be only for those periods when one of their manager has performed better than others, and maybe it's a paid promotion. Right? Very similarly, I said, who knows whether they really played the game for 30 minutes or not? Who knows?
Yeah.
Right? So I'm saying, and whatever I said, it just told you the same things in different lines, right? Where they say that it's difficult to even eliminate. And even though we do a lot of due diligence, we still might miss out because maybe not everything is available, and whatever it's available, it's not important that everything that you see is correct. Right? We look at all the third parties, we look at their holding based returns, their basically holding based attributions, their return based attribution. So we look at different things, but again, we could miss out on a lot of different things that could drive the overall thing. Is that okay? Are you understand what I'm saying?
Yeah, I'm understanding.
Okay. Lastly, they also say that when you look at the manager universe, it is pretty volatile because managers can come and go. So your universe is gonna get shortened or get lengthier depending upon how many managers are working on that style. And sometimes it's also difficult to take a decision because sometimes there are too few managers and sometimes there are too many managers. Too few managers would not give you an idea of whether you should select A or B. When there are 50 managers and everybody is giving you similar returns, even then it is difficult to decide which one to go for it. Right? Then they say when it comes to quantitative analysis, so I was saying that we did the qualitative, and then for the quantitative, we discussed that we can always do the attribution.
Yeah.
And then we can also look at the appraisals. When I said appraisals, we talked about that already. In terms of appraisals, there were 7 things that we discussed, right? This trainer ratio, information ratio, and whatnot. So they say that we can always do that. And then if required, we can also look at the drawdowns.
Right.
Okay, drawdown also help us understand that in whatever manager that has taken a position, in how much time did it recover. If manager invested in stocks or a portfolio, because think about this, right? I sometimes I do some kind of pro bono things, right? So I was talking to one of the person and he said that he got his money invested by somebody. It was around 25 lakhs. So, and from the day that girl invested for him, the market is not performing great. And it's been 2 years. So initially he had a loss of 7 lakhs on 25 lakhs. And currently his loss is 2 lakhs. And it's been 1.5 years now. So I can say at a portfolio level, his drawdown was whatever it could be, the maximum drawdown, let's say 7-8 months, but it's still taking time to recover. So if my manager's overall drawdown is the lowest, it means the securities in which my manager is invested into, it is able to recover very soon. Then it's a good manager.
Yeah.
Okay, but then it says even though we do so much and then we try to do so much and we know, but still there could be problems that we could face. And the reason they say is that even though we do the attribution analysis, you would realize that the attribution analysis is all on the historical data. Now, what is the likelihood that the same level of returns that we saw is going to happen in future? Right?
Yeah.
All the attribution analysis is only based on the historical data.
Correct.
About the past, while we don't know that's if that's going to happen in the future or not, first. And second, that we don't know if the manager has how much risk has he taken, and has he captured all the different type of risk that would come. Now what does that mean? It means that he would assume that the market would not go below this or there would not be a crash. So obviously he has over invested or under invested in something. Right? Think about this. All of us go on a best effort basis that क्या ही हो जाएगा, इतनी ही मार्केट गिर जाएगी, ऐसे लॉस इतना ही हो जाएगा. Right? And trust me, this has happened with me. I mean, कहने को okay, I'm a CFA and then I have worked in different big companies, whatever. ये सब theoretical चीजें हैं. But practical thing is that I invested into Bank of Maharashtra, and the level was around 45, 46. And it went up to 73, and I looked at all the fundamentals, everything, right? And I thought कि मैं तो उसको 82 के ऊपर बेचूंगा, and I had big position. I thought I'm gonna sell it at 82. It went up to 73. I was telling my dad and said कि अरे इतना बढ़ गया है, तू बेच के छुट्टी कर. मैं बोला नहीं अभी तो और बढ़ेगा, देखो बहुत अच्छी कंपनी ये वो. So there were forums that were saying that it is gonna it is gonna go down and then the markets were not looking great and the crash is gonna come. मैं बोल रहा है कितना ही गिर जाएगा, कितना गिर जाएगा, और थोड़े से मेरा गिर जाएगा, सबका गिरेगा ना. तो अगर कंपनी के फंडामेंटल्स अच्छे हैं तो लोग उसको नहीं बेचेंगे, right? But you won't believe it came to 48.
Oh my god.
ठीक है. So मतलब my 1 year profit has become zero. ठीक है. And it is currently at 56 now. It's been 2 years. I'm still holding. मतलब while I could have sold 1 year before, 1.5 year before, and could earn a lot of money. From 48 to 73, but now 45 to 73, but now it has gone down to 48. 48 तक नीचे आया. मेरा पूरा साल का पूरा प्रॉफिट खत्म हो गया, and I'm nowhere. And I do a lot of trading on margin.
Okay.
So I'm paying 18% interest as well every year. तो जो मेरा रिटर्न गया वो तो गया, प्लस 18% और मैं पे कर रहा हूँ अपनी जेब से, और फिर then there are margin calls. So my parent doesn't know that I bet a lot on these things, but the idea is कि sometimes we try to be over smart. It doesn't just work. ठीक है. So it says that when we look at these continuity of returns, because as I said that we don't know whatever the manager has done is gonna continue or not, so we can look at 4 P's. They said let's just look at 4 P's. These 4 P's are philosophy. You can look at process. You can look at people, and then you can look at portfolio. Right? Now, the philosophy talks about that what is the philosophy of the manager. Matlab, how good is he to find the inefficiencies in the market? How good is he to find the inefficiencies in the market? Second one, the process talks about the process and the people. It's about that once he found that there is an inefficiency in the market, how does he exploit that inefficiencies? Right? Making the good usage of his resources.
Right.
And then finally, that once I understand that there is an inefficiency in the market, I can exploit, and I have the right resources, then how would I construct my portfolio to capture that opportunity is been given by the portfolio. Okay. So it also says that we should look at the 4 P's on how they have performed historically when they found such inefficiencies in the market. How did they build their portfolio? How did they manage their resources? So this will give them an idea. Ki, hum bolte na, sometimes a lot of people ask me that, Ankur, which small cap or which other mutual fund I invest into? So I said, if you look at a lot of different funds, Bandhan Bank small cap fund is a good option. But if you look at this in detail, you would realize that it was started just a few years ago. Versus there's another one which is Nippon small cap. ठीक है, मेरा तो कोई commission किसी में भी नहीं है. I just like to read these things. So I realized that Nippon, I think it has a history of around 30 years.
Wow.
And if you look at the return, it is around 25-26%.
Wow.
While for Bandhan Bank, it is 35%. Everybody would believe that, okay, let's go for Bandhan Bank, it's giving 35% return, while this one is giving 25% return. But I'll still vouch for Nippon at 25% because 30 साल से अगर वो दे रहा है, तो it means it has seen different business cycles.
Yeah.
उसने लाइफ के सारे फेज देख के भी अगर वो इतना मेंटेन कर पा रहा है, it means the selection is right. Right? So that's a kind of due diligence that is required, that we don't look at the short-term outperformances, but we look at the long-term history of how they have behaved and performed in various market conditions. Okay?
Yeah.
There's one more thing that they talk about is, we should also look at a very important thing is the suitability. वो ethics में पढ़ा होगा ना, suitability.
Yeah.
Right? So whenever we look at the manager's philosophy and maybe we look at the IPS, the objective, right? We should also look at that, has the manager always followed the suitability constraint? Maybe the manager is giving me a good returns. IPS में नहीं लिखा था कि IPO में इन्वेस्ट कर सकते हैं, बट मैनेजर ने IPO में इन्वेस्ट करके give you 150% return. Seems to be a best manager, but IPO was not suitable for that kind of client. Right? So we should also do, again, when it comes to due diligence, to be honest, nobody does that. Right? How many times when we take a loan, how many times do we really read all the papers? We just sign and go.
Yeah.
Okay? But at least theoretically they say that we should do and check all of those things. Now, even though checking all of those things can still incur my errors. Now there are two types of errors, type 1 and then type 2. Matlab, I think this type 1 and type 2 errors are one of the most confusing topics in CFA, and not because they're difficult. For some reason, it's not easy to remember.
Yeah.
And to be honest, it happens with me as well. Matlab, no matter how clear my concepts are, but मैं हमेशा type 1 type 2 में confused जाता हूँ.
Yeah.
तो मतलब मुझे बुक रेफर करनी पड़ती है. तो again, I don't have a good idea on how you would remember this, but I can at least tell you what is the right way, what is the right thing about type 1 type 2 errors, right? So I would say the original hypothesis is, you can say, H0, which says that there is no value added by the manager. Okay. So you can see that if I would say I am rejecting the null hypothesis, it means I can say that the manager is adding the value. And if we are unable to reject the null hypothesis, we would say that the no value is being added by the manager. Okay, so far so good?
So far so good.
Now, my type 1 says, right, you are rejecting null. You are rejecting the null. Now, when I say I'm rejecting the null, what does it mean? It means value was added.
Yeah.
Rejecting the null means value was added, but no value was added. Okay. Again, my recommendation is just remember type 1 and then type 2 can be derived. But for sake of it, I can tell you that for type 2, it is the opposite.
Yeah.
The value was added, but either you can call it this way, that manager was fired, or you can call it that manager was not hired.
Okay.
Obviously, it means that the value was added originally, but we believe that no value was added, which means we didn't reject the null hypothesis, right? So in this one, effectively, the value was added, but the manager was fired or he was not hired, which means we assumed incorrectly that no value was added by the manager.
Correct.
Is it clear?
Yeah.
अच्छा, एक और बात. We say that जो type 1 है, this type 1 is because of commission. Commissioning means somebody is writing the returns, or maybe just creating a report card of the manager, and he accidentally, or maybe out of favor, or maybe whatnot, he just put some incorrect numbers, that the manager is performing good.
Got it.
That's the reason you are saying that the value was added, giving credibility to the manager,
Yeah.
right? But there was no value added. So this could be the issue of commission, while this could be the issue of omission.
Hmm.
मतलब रह गया, छूट गया, ध्यान देना रह गया, उस मैनेजर पे फोकस रह गया, या उसका डिटेल्स डालना रहे, कुछ भी, whatever you can call it. But the point is that it could be the error of omission, that you missed to look at the performance that he has created. Does it make sense?
Yes, it makes sense.
Okay. Another point is that type 1 error is difficult. Sorry, it's easy to identify than type 2. ऐसा क्यों?
Type 2 error is?
Type 1 error is easy to identify. Type 1 error is easy to identify than type 2. ऐसा क्यों? वो इसलिए that you currently have a manager already.
Hmm.
You currently have a manager which, maybe by chance or maybe out of favor, right? You are keeping the manager.
Correct.
Ultimately, you are keeping the manager. So if you are keeping the manager, तो you can easily identify कि अच्छा मुझसे कुछ गलती हो गई, कोई वैल्यू ऐड हुई ही नहीं, बट मैंने अज्यूम किया कि वैल्यू उसने ऐड की है, राइट? But type 2 error is difficult to identify because you took a decision today that let's fire this
Yeah,
manager,
it's hidden.
right? Sorry. And he left the organization,
Hmm.
right? And maybe you are taking an interview of somebody who you did not hire, right? But he has left now. Now you don't have any track of those managers. So how would you identify and how would you fix? Does it make sense?
Yeah.
So it says your type 2 is difficult to identify, while your type 1 is is easy to identify. But they say that what can we do about this? So they say that it is, I believe that you should keep track. When I say I believe, it's not literally I believe, but what your book says, it says that we should keep track of all the managers that you hire, which obviously you will keep track of, and you should also keep track of those managers who you either fired or not hired. ठीक है, तो हमारा ऑब्जेक्टिव क्या रहता है कि जो भी हमारे मैनेजर हमारी ऑर्गेनाइजेशन में है, यू जस्ट लुक एट दोस मैनेजर्स हाउ दे हैव बीन परफॉर्मिंग. बट मैं कहता हूं that we should also, मतलब your book says that we should also keep a track of those managers who could be the potential managers in your organization or who actually left the organization. If you keep a track of those, then you will be also be able to identify if you really fired the right manager and if you're keeping the wrong manager in your company. So far, so good.
Yeah. So cute.
They also talk about one more thing, and then I'll just check later if I've
Yeah.
missed anything else. Is what is that? Huh. How about when the markets are mean reverting? Let's understand a situation where markets are mean reverting. So basically, you have a manager, he is not performing well, right? So you fired. But when the moment you fired, the markets were mean reverting, and then he started performing great. You hired a person from outside, looking at his historical performances. So you hired him, and then there was a market mean reversion, and the day he came in your organization, it was all underperformance, right?
Yeah.
So they say, if the markets are mean reverting, then type 1 error may occur when firing a poor performer only to have performance improve subsequently, or hiring a strong performer only to have performance deteriorate subsequently.
Yeah. No, Yeah. In both, in the first case, the null hypothesis, this guy is a poor performer. No, the null hypothesis is
No. So both of them are type 1.
okay.
Both of them are type 1.
Okay.
Basically, you are taking an incorrect decision,
Yeah.
right? Where you are looking at that he has not performed and you fired,
Mhm.
versus you looked at the past performance, you hired, but then the markets are mean reverting and then it starts underperforming,
Hmm.
right? And then it also says that there could be a type 2 error, right? Because you looked at the strong performance,
Yeah.
and एक मिनट, for type 2 error, I'm just uh, yeah, okay. For type 2 error, in a type 2 error, just because you don't hire or you fire, right? So it says in a type 2 performance, you looked at their past performance, which was poor, and looking at that past performance, you did not hire them,
Hmm.
or maybe you fired them, and that's how you made a type 2 error.
But isn't that the same as the first one? Not performing, and then you fire him, and then he starts performing.
No, that's the second one.
Oh.
एक minute. That's a in a type 2, you are not hiring or you are firing. Oh, that's a first one. Yes,
Hmm.
that's a first one. So remember, in a type 2, a type 2 error would happen when you either
Got it.
not hire
Or fire.
or you fire. That's your type 2.
Hmm.
ठीक है?
Yeah.
Let's just look at this. They have created a table, simple enough, but let's just look at that together. Yeah. Can you see here? There is no skill set. Don't look at type 1 right now. There is no skill set. If the
Mm-hmm.
manager has no skill set and you do not hire,
Hmm.
or maybe you fire, that's the right thing
Hmm.
to do. स्किल सेट नहीं है और हायर नहीं किया है, फायर किया तो ठीक किया.
Hmm.
स्किल सेट है and you retained or you hired, so you did the right thing.
Hmm.
ठीक है, यहाँ तक क्लियर है? Now,
Hmm.
there is no skill set. There is no skill set, and yet you retain somebody.
Hmm.
There is no skill set, and yet you hire somebody. Is the type 1.
Yeah.
And there is a skill set, and yet you did not hire or fire is type 2. Okay? So the good way to remember this, that in type 2 you are firing good managers. If you can
Yeah.
remember that in type 2 you are firing good managers,
Yeah.
which is as good as not hiring good managers. Okay? If you can remember this, that will also be enough.
Yeah.
Are you clear?
Yep.
I'm just looking for a word here, but I want to tell you the right thing. One second. So I think this one, which is type 1 error, it is called as false positives.
Hmm.
ठीक है? And type 2 is called as false negatives.
Yeah.
But I just want to reconfirm this before I'm going to tell you. It should be somewhere. Don't tell me it is not there.
No, but I'm aware of this.
Yeah. No, I'm just thinking. Am I telling you the right thing? If type 1 ही false positive होता है.
No, that's correct. Yeah.
Oh, that's correct, right? Okay.
Yeah.
Yeah. So type 1 is false positives and type 2 is false negatives. ठीक है?
Yeah.
Uh, All right. Yeah, this is important. The cost of type 1, type 2 errors. So they say it is not literally by cost, they literally mean the cost, but basically, if you were to hire a good manager, but you did not hire, versus you fired a good manager, that itself is a cost, right? So they say that there's a type 1 error result in the cost associated with retaining the managers who are weak. Can you see that?
Yeah.
In a type 1, you are retaining the bad managers.
Yeah.
And in a type 2, you are not retaining the good managers.
Hmm.
Okay? One thing they also mention that when the markets are efficient,
Hmm.
right, it is difficult for us. Think about this. How can I say, how can I say that I should fire or hire a manager? Think about this. If there is a manager who has been consistently outperforming in various market conditions, I would know that's a good manager. If
Hmm.
somebody is no, it's a bad manager. So I'm saying if the differences in the returns is huge, if the differences in the returns is huge, then it is easy to figure out which is a good manager and which is a bad manager.
Yeah.
Is that correct?
Correct.
However, when the difference is not so huge, now think about this. When you look at all the different mutual funds, let's example, although they are not into active management, they're passive. But I'm saying let's when you compare, did you ever feel that all the different funds are giving me similar returns?
Yeah.
Some funds are giving me 27% return. Some
Hmm.
funds are giving 25% return. Some funds are giving me good returns in 1 year. Some funds are giving me good returns in 3 years. Effectively, when you look at them, कोई कहीं अच्छा है, कोई कहीं मतलब it is like a credit card. किसी में lounge access है, किसी में cashback है, सब कुछ एक में नहीं है.
Yeah. Yeah.
So they'll force you to buy every credit card if you want to avail everything.
Hmm.
ठीक है? So the point is that if there are drastic differences between the performance of the managers, then it is easy for us to figure out which is good, which is bad. But when the markets are efficient and when the active management does not work a lot,
Hmm.
markets are efficient, then they say, right, you cannot earn money consistently. You know
Yeah.
the EMH theory, efficient market hypothesis,
Yeah.
right? Based on technical indicators, you cannot earn money. Based on fundamentals, you cannot earn money. And with the
Yeah.
strong market efficiency, then even with technical, fundamental, or insider trading, you cannot earn money.
Hmm.
See, so we are into semi-strong right now. So the point that I'm trying to make over here is when the markets are efficient, so you would not be able to earn so much money actively, which means that it will not be easy to identify which
Hmm.
manager is a good manager or which manager is a bad manager because most of the managers would be performing similarly,
Hmm.
right? So they say that when the markets are efficient, the dispersion of the return distribution between the two groups is probably small.
Hmm.
The
Hmm.
distribution is small due to the greater difficulty in achieving alpha. Obviously, we understand that in efficient market.
Yeah.
And then which would lessen the cost of hiring or retaining the weak manager. It means you would be making an error. You would be making an error, but the cost is less because even if you have hired a good manager, or
Yeah.
maybe if you have fired a good manager, doesn't make a difference because everybody is earning similarly because the markets are efficient.
Yeah. Yeah.
Okay. And lastly, something that I was discussing. Look at this. If the markets are mean reverting, the type 1 error occurs when firing a poor performer only to have performance improve subsequently, or hiring a strong manager to performance deteriorate subsequently. Okay?
That is tier
Look at
one.
this. Yeah.
Okay.
And then it says type 2 error occurs in the mean reverting markets when strong managers are fired or not hired.
Hmm. Hmm.
Something that we discussed already. The type 2 error में याद रखना है, you are either firing or not hiring.
Got it.
ठीक है? All right. let's just try these questions and then we'll proceed.
First one is B, evaluating a performance appraisal. That's quantitative in nature. Question 2 is C,
Okay.
we just discussed.
Mhm.
Question 3 is B.
Question 3 is B. A return distribution of skilled manager that is not
Efficient
listed.
market.
Okay, good. So clear on these things?
Yeah.
Now, they also said that let's do some analysis. Again, analysis as in again the theoretical analysis. They say that l- let's just try to do some analysis on what uh, his style is, right? So they do some kind of, we do some kind of a style analysis. Now, one thing is, let's say the manager says that he's a large cap, his forte is large cap.
Hmm.
Then should we just look at the large, then his returns and the holdings that he has?
Yeah.
We believe that he has a holdings in large cap, which is great. He is giving me decent return, which is great. But when he say that his style is large cap, then it means that he should be able to do some overweight and underweight in the large cap securities.
Hmm.
Right? If he is not doing that, then I can't say that the manager has a skill set or he has a 14 large cap. क्योंकि अगर वो लेना है तो स्मॉल कैप तो मैं भी इन्वेस्ट कर सकता हूँ, राइट? मैं भी स्मॉल कैप में जाऊंगा, आई विल जस्ट फाइंड आउट द 10 small cap securities and then I invest into this.
Yeah.
So it is important to analyze, to go at a granular level and to see that whatever his ideology was, whatever his expertise was into, how much overweighting and underweighting he is doing with respect to that skill set, and and how much return it is giving me from those things, and is it giving me those returns consistently or not.
Hmm.
Right now, the two things that we could use in these things, again, something that we use as, they use the word RBSA and HBSA, which is return based style analysis and holding based style analysis. But just think about this. Have you studied RBSA before?
Yes.
किया था ना? तो उसमें हम
Yes.
लोग क्या कर रहे? What were we doing in return based attribution?
Yeah, correct. We were regressing the returns against the market.
Yeah, so we were regression of the returns, we can say.
Yeah, this was against RM minus RF, right? Return on market minus the SWE rate.
Return on market minus, no, yes. So any of the benchmark that he's using, whether market or something else, but
Yeah.
you regress those returns with respect to your portfolio returns.
Hmm.
It doesn't have to be RF only.
Hmm.
So basically what it does is, your RBSA, it checks for various sensitivity,
Hmm.
right, to different risk factors, we can say. Okay. And then I'm just thinking that once you do the regression, and then you can see that how much return has he producing,
Hmm.
right? You can, I mean, the computation is easy. You don't need to, no need to see all holdings.
Yeah.
Basically, everything that we discussed in your return attribution. But the disadvantage or the flip side also is that obviously it will lack the precision. Why? Because you are looking at only at a return level and not really getting into holdings level, right? Second thing is that let's say there are some sub period changes. You invest something in today and then you either increase the exposure or you decrease the exposure. You will not be able to see that because you're only looking at the period end returns. Right? Maybe something has happened in between, but since you're looking at the period end return, so you will not be able to capture the sub period changes.
Yeah.
And another thing is, in case there are illiquid securities, right? In illiquid securities will have stale price. ठीक है. अब स्टेल प्राइस का प्रॉब्लम क्या है? स्टेल प्राइस से ही तो रिटर्न बना है.
Yeah.
तो अगर प्राइस ही स्टेल है
Lack
तो
precision is which one? Like, why do you say lack precision?
I'm using the word lack precision because ultimately you are looking at the static portfolio. So we do not assume any kind of sub period changes. We just look at the returns and we do not get into the holdings of the portfolio. We just said that okay, as on this date, these are the returns versus as on that date or as on the same date, these were the reference returns. So when you regress both of them, then you see that okay, how much has he outperformed or underperformed.
Yeah.
Right? So it lacks the precision in a way because it does not look at the sub periods and does not look at the holdings overall. Does it make sense?
Yes.
Also, you can imagine that all this RBSA, I can say that they are not very accurate because it all depends on when are you doing this. Basically, your regression results and the overall analysis will change as per the date on which you are doing the analysis. Right?
Yeah.
Obviously, for a period you are using from Jan to December 2008, will we have different risk factors and different attributions than from 2020 versus then 2002. Right? When it comes to HBSA, in this you look at the actual securities. Something that we discussed already. Acha, while your RBSA kind of a top down.
Yeah.
Calling it the top down because वो broad level पे दिख रहा है. Your HBSA is pretty much bottom up. Why? Because it's looking at the actual securities. Okay. This is mostly based on equity based strategies. Because ultimately you're looking at a equity level and then you're saying how much weight am I doing, how much transaction I'm doing, how much buying, how much am I selling, what are different cash flows in between. I'll take care of those things. Right? Again, when you look at these as at a security level, so this inherently makes this process complicated. Right? Again, you can imagine that illiquid securities and stale pricing is a common issue.
Is a
common issue between these two.
Complex? Why did you say it was complex? Because tough to get data, is it?
हाँ बिल्कुल. मतलब अगर अपने को सिक्योरिटी लेवल पे जाके रिटर्न्स तो दिख रहे हैं ना. एंड रिटर्न्स तो इंडेक्स लेवल से भी आ सकते हैं. कुछ नहीं करना बेसिकली. राइट. बट सिक्योरिटी लेवल पे जाके सिक्योरिटीज का वेट निकालना, उनका रिटर्न निकालना, उनके चेंजेस निकालना, इट टेक्स अ. ठीक है. देन दे से again the reiteration, this was a reiteration of what we discussed, but this is all in your books. Another reiteration is about capture ratios that we discussed today. That if you are looking at your manager, okay, then you can also look at the risk tolerance. Basically, this will be helpful for us more than the manager.
Which one, sorry?
I'm saying the capture ratio is mostly useful to us more than the manager.
Yeah.
Is because I would know how much are we sensitive to the downside.
So when they calculate this, they simulate or something like that. What do they do then?
Sorry, in which one? Capture ratio?
Yeah, like are they simulating? Are they looking at historical? What are they doing?
कुछ भी करने की जरूरत नहीं है. मैं let's decide a period. Let's say I'm looking at 2008.
Yeah.
Simple. And I would say let's assume 2002 when this is a let's say a good market.
Mm-hmm. Okay.
The bad market.
Got it.
अभी मैं देखूंगा कि बैड मार्केट में while everybody else my overall benchmark was giving me minus 20% return.
Yeah.
Right. My manager gave me let's say 8% return.
Yeah.
This is RP. This is RP. And in 2002 when market was giving me 10% return positive, I was getting 20% return. So my upside capture ratio is being given by 20 by 10 and my downside is minus 8 by minus 20.
Yeah.
Right. So you can clearly see this is 2 and you can see this is less than 2. So basically this is going to be more than 1.
Yeah. So he's a good manager.
Yeah. So more than anybody else, this will help me as an investor to determine what's my risk tolerance is. Right. So if my risk tolerance is low, basically I don't want to see too much of a downside, then I should only focus on the capture ratio of the managers which is more than 1. ठीक है. अब
Yeah.
The bigger question is, I get it that capture ratio more than 1 good for me, and I think that everybody else in the world would want to go for capture ratio more than 1. Because I understood that, but the point is this positive convexity, positive not convexity, positive asymmetry, because this will lead to convex nature, and capture ratio less than 1 will lead to concave nature.
Yeah.
The point is when I see this positive asymmetric, my only thing that I need to understand is this because of luck, or has it been doing it because of the skills of the manager? Right. This is another challenge that I need to look at. Yeah. So it is important that I look at different time periods to identify if the manager has been consistently giving me CR more than 1 or not. Okay. Because in some of the time periods, it could have been just a luck that the capture ratio is more than 1. Yeah. Okay. All right. They also talk about one line, and I want you to read this through, and we'll see that. Look at this. When betas are increasing, momentum-driven strategies should have higher UC than value-driven strategies. Can we understand this? Yes. Yeah. क्यों ऐसा? The price is going higher and higher. Yeah. Okay. For a price of higher and higher, when betas are increasing, what does it mean when betas are increasing? Market is increasing. No. So when they say that when the betas are increasing, correlation. Correlation. Yeah. No. So what do you think? Think about this. The market has a beta of 1. Yeah. If your portfolio has a beta of 2, what does that mean? Your portfolio is much aggressive than the market. Yeah. So if the market is giving me 2% return, your portfolio is giving me 4% return. That's the sensitivity. Yeah. So this is when the betas are increasing, right? The momentum-driven strategies, which means price higher and higher, you will have a higher UC. I see. Okay. And a low beta strategy will have a lower UC and DC. Okay. Because betas are increasing, sorry, betas are decreasing. What does a low beta means? That you are less sensitive to the change in market. Got it. If you are less sensitive to change in market, got it. Which means that if the market increases by 5%, your portfolio will increase by only 3%. But when the market decreases by 5%, your portfolio also decreases by only 3%. right? So they say when then there is a low beta, the strategy will have lower UC and DC. Therefore, CRs can be used to confirm the investment strategy. Okay. So overall, I can say that how aggressive my manager is and how much positive or negative convexity that I get can be driven by capture ratios. Is that fine?
Yeah.
Okay. Another thing, something that we have again, no new concept. They again talk about drawdowns. Okay. It's a total peak to trough loss. We talked about this. And then they say, look at this drawdown duration is the total time from which the drawdown begins and when the total drawdown recovers to zero. Does it make sense? Okay. They also say that in comparing a long only strategy, you understand what a long only strategy is?
Yeah.
Versus a low beta strategy. It is quite possible for the low beta strategy to outperform long only strategy on a risk adjusted basis. Let's read this again. They say if you are comparing a long only strategy versus a low beta strategy, okay, it says it is quite possible for a low beta strategy to outperform the long only strategy on a risk adjusted returns basis. ऐसा क्यों?
Basically, they're saying the Sharpe ratio will be higher.
The Sharpe ratio will be higher. Yes, you can call it. Yes, true. So they say when you have a lower beta, it means your portfolio is lenient, or I can say not aggressive as the market. As I said, if the market is giving me 5% return, it's going to give me 3%. But if the market is giving me -5, it will also give me -3. So it is a low beta strategy.
Yeah.
A low beta strategy, since I'm not very sensitive, so either my returns are low, I agree, but my risk is also very low. Okay? Again, as I said, they can say that it is quite possible. So this is not a blanket rule, but this could happen since the risk is lower. On a risk adjusted basis, you still might outperform. Okay? And this is what we have seen overall, even in the markets. You invest into very aggressive stocks that has a high volatility. So even though you think कि अरे कल तो 100 रुपए पे प्राइस लगाया था और 2 दिन में 140 हो गया, तो इतना जल्दी तो कोई भी नहीं बढ़ता. ठीक है, while you think that way, but you can imagine if it can go up to 140 in 2 days or 130 in 2 days, it has a potential to go down to 65 as well in another 1 week. ठीक है, वो lower lows मारता जाएगा. ठीक है, all right. I'm just thinking if there's one more thing that I want to talk about here. Look at this line. There is a fine line between risk management versus self-preservation. Okay. It says it may be prudent to sell immediately to immediately sell assets with unrealized losses in a market downturn, because the losses may become worse later due to fundamental change in the assets. Right? We understand this? तो हम लोग क्या करते हैं, वो पैनिक सेलिंग करते हैं कि अरे मार्केट गिर रहा है, कितना ही रिकवर कर जाएगा. ठीक है. And I actually did that yesterday. So I had a good stake in SJVN. Not really know about SJVN. So there was a time, जब एक ऐसा time था when I used to trade in SJVN every single day. And हर दिन का मतलब मैं 5-7 हज़ार रुपए रोज के निकालता था. And that too 5-7 हज़ार रुपए निकालना happens in 5 minutes. Wow. मैंने कभी भी ऐसा किया नहीं कि 9:15 पर ट्रेड किया and then I'm selling it at 2 PM. ऐसा करता ही नहीं था मैं. तो बेसिकली I trade at market opening वो 9:07 पे या फिर वो लास्ट ट्रेड लगा दिया जो भी है. And then का 1 rupee higher, so you will get the market price. And at 9:15, most of the times, the market at least go up by 1 or 2 rupees. I see. अगर वो 1 रुपया भी ऊपर गया, तो I can get my 5,000. 5,000 शेयर लेकर.
ठीक है, एंड उसके बाद पूरे दिन कुछ नहीं करना, मुझे और टेंशन नहीं, 5,000 रोज के निकाल दिए मैंने, एंड समटाइम आई आल्सो गॉट 10,000। तो ऐसा भी किया, तो मतलब इट वाज देयर वाज अ टाइम व्हेन आई स्टार्टेड ऑफ विद SJV at 65 rupees and I used to trade every day and till it went up to 120 rupees.
Oh my God.
But I didn't earn from 65 to 120. I earned that 5,000, 7,000 every day.
I see. So you like broke it down like duck.
मतलब मुझे फर्क नहीं पड़ता, मुझे 85 का मिलेगा तो भी चलेगा, क्योंकि मुझे 85 से 86 चाहिए बस.
Correct.
All I need that 1 rupee. ठीक है. So the point is, and then it went up to 130. So I stopped trading because that my margin was too high then to trade on those. I stopped trading, and then it went up to, I think, 160. I didn't follow that, and then it came down to 100, where I thought that 100 is actually the fair value, and from now it will increase. So I actually क्या बोलते हैं, I took a big trade on SJVN, and then I kept it. It went up to 105 or something, and then it started going down again. Okay. It reached to I think no, I forgot. I actually made a trade at 150.
150.
Yeah, 150. So at 150 it started coming down. It came to 95 somewhere, and then I said कि अभी ये government company कितने भी project आ जाए, it is not going to be that aggressive, which it clearly says that we believe that the losses may worse later due to the fundamental change in the asset. So even I also felt so कि अभी ऐसा प्राइवेट कंपनी में तो क्या, अदानी को एक प्रोजेक्ट मिल गया, उसने कुछ पोर्ट एक्वायर कर लिया तो बढ़ जाएगा रेट. SJVN को नया प्रोजेक्ट मिल जाएगा तो क्या होगा, उससे कितना बढ़ जाएगा. It is already very aggressive. So I said, okay, the fundamentals might change, and the people who are very aggressive initially, they might not be very aggressive now. So I just sold with an unrealized loss of 5.5 lakhs. ठीक है, yesterday. क्या करेंगे? So this I'm saying कि this is something that even we believe so, right? And then it says it might be risky to sell assets in the market downturn should there be a subsequent reversal. Obviously, the moment I sold it, the next moment it increased by 1 rupee. So I could immediately saw कि अच्छा ठीक है, 10,000 का तो अभी लॉस हो गया मुझे, मतलब 5 लाख के लॉस में 10,000 कम हो सकता था. Correct. So but the point is that what's important for me. अभी मुझे क्या है, 5 लाख देके okay, I'm done and dusted with that stock. Or should I be thinking कि वो regret रखना था कि क्या और गिर जाता तो versus बढ़ जाता तो. Correct. That's kind of somewhere over here. So what I'm saying is, all of those things that I realize is more of what you see day in day out. It's just that if you have experienced those things, you will be able to relate कि हाँ ऐसा ही होता है. ठीक है. All right. Let's just quickly look at these two. We are almost done. There's small things. We'll be able to finish with another 15.
Edge. Its first one is A.
Really?
Pardon?
Is it okay? HBSA is a more precise tool. Is incorrect. Okay. HBSA is generally easier for equity strategy.
Oh, it's least likely an advantage. Sorry. It's C.
How about the second one?
I mean, it's like process of eliminate. Like C is the right answer because it's clearly wrong.
The managers whose relative performance is better during market upturns.
Oh no, so I'll move to 2. So the first one is C, right?
Oh yeah. Acha, I thought that okay. Yeah, first one obviously is C.
Yeah, okay. A manager whose relative performance is better during
One second. It says least likely.
Yeah.
Okay. And HBSA is a holding based, so it is difficult to obtain.
Yeah.
Obviously, this is more precise tool, which is correct. It is mostly for equity studies that we discussed. Okay, but it is the data required is more and not easy to obtain. Hence, C is the right answer because it says least likely. Okay. Go to second one.
Manager whose relative performance is better during market upturns is most likely has a capture ratio that is greater than 1.
Okay, easy stuff.
Yeah, easy stuff.
All right. the next one they talk about is evaluating managers, right? So there they say that when you are evaluating the managers, there are different things that you need to keep in mind. That how would the evaluation would be easier, as I said before, the evaluation of the managers would be easier if there is a huge difference in the returns that they produce consistently, right? However, with the markets getting more and more efficient, and while all the different managers are saying that there is not money in active management anymore, let's go passive. And I hope you know that Bill Gates once said that you cannot beat the market consistently, right? So let's go passive.
Who? Bill Gates.
Yeah.
I see.
So sorry, not Bill Gates, Warren Buffett.
Right.
Not Bill Gates, Warren Buffett. Warren Buffett. Right. So they say that you clearly see that you will not be able to beat the market consistently. So it's better that you go passive, and that's the reason he wrote that book. Not he didn't write that book, but he was a contributor to that book, which is The Intelligent Investor. So there's a book, Intelligent Investor. In that, he is a contributor where he clearly mentioned. I read that book at least half. So it just says that had you been investing $1 every month or every year, you would have earned a lot than any active management these days. Yeah, but I think The Intelligent Investor was written in 1978, if I'm not wrong. तो उस टाइम या 1980s में लिखी थी वो बुक, और तब से he has been proposing कि जो अपना ये होता है ना,
but he himself is an active manager, but
yeah, he himself was an active manager, but then after doing so much of the active management, he realized that it is very difficult to beat the market.
I see.
मतलब वही वाली बात है कि मैंने मतलब our business is into real estate. ठीक है, तो मतलब me and my dad does a lot of these things in real estate market, and we know different markets.
Yeah.
तो हम लोगों ने भी मतलब we have spent around 30-35 years in real estate, and sometimes we just talk about it कि that अगर मैं इस पैसे को म्यूचुअल फंड में डालूं, तो जितना आपको रिटर्न रियल एस्टेट से आ रहा है इन लॉन्ग टर्म, उससे ज्यादा रिटर्न आपको म्यूचुअल फंड में आएगा, एंड देन इट्स स्ट्रेस फ्री, इट्स अ लिक्विड मनी. आराम से घर बैठो, आराम से पैसा डालो, कुछ नहीं करना. लैंड में इतने ड्यू डिलिजेंस है, फिर कब्जे हो जाते हैं, फिर स्ट्रेस है, फिर आप फ्लैट लोगों तो रेंटल चढ़ाना, कमीशन देना, फिर पानी खराब, नल खराब, बहुत चीजें. ठीक है, उससे अच्छा आप म्यूचुअल फंड में इन्वेस्ट करो, यू गिव यू सेम. तो मतलब बाय डूइंग दिस वी रियलाइज दैट व्हाट वर्क्स बेस्ट फॉर पीपल मोस्टली. Right, so they just says that if you have a discipline and if you keep investing a same amount every single time, maybe frequency could be the lower the higher the frequency, the better it is. You want to do it daily, nothing like it. But even weekly or monthly, whatever consistency that you put in, then you can get even far more risk-adjusted return than by any other active management strategy. Okay. So the point, I mean, I digress a little bit, but they are saying that while looking at the right managers, it is now these days it is difficult because most of the managers are going passive. Okay. If most of the managers will go passive, everybody is going to earn pretty much the same return. थोड़ा बहुत यहाँ वहाँ. ठीक है. So the point is sometimes it's then becomes difficult. So what you can do is you can try to see two things. One thing is the behavioral inefficiencies.
Yeah.
And then the structural inefficiencies. Okay? They say, look at this. The active strategies take the position that markets are inefficient and allow for those inefficiencies to be exploited. Okay? We said active strategies talk about this, while probably they would say it somewhere. Yeah, those managers will execute passive strategies and attempt to earn risk premium instead. Okay? So if you are looking at the passive strategies, you will not be able to identify. All right. And then it all depends on the philosophy of the manager. If you believe that the markets are efficient, you will go passive. While if you believe that markets are inefficient and you want to exploit the opportunity, then obviously you will go active. Make sense?
Makes sense.
Okay. And then they say, if you think that you want to go active, which means that you think that the market is inefficient, then you can have two things, where one is behavioral inefficiencies, that these are basically the mispricings. caused by other investors and behavioral biases.
Yeah.
Again, what are those mispricings are? Basically, when let's say panic selling,
Mm.
you can see there are news coming up for a lot of shares that this stock has a high potential and you can see upside of 40%. So हुआ क्या है उसके अंदर? A lot of people just sold it because of maybe panic selling or something else. ठीक है? Or maybe others are also selling, so they looked at the volume and then they sold it. Or maybe they looked at structural inefficiencies. What are structural inefficiencies? Let's say they are going to there is kind of a regime change, or maybe they are going to change some tax things, right? Interest or something, and that you know or that you feel is gonna come up in next few months. So that is going to happen in long run, but from now till that gets implemented is the time when you can exploit that opportunity. Okay, just to give you a simple example, at least in real estate, you know, in Navi Mumbai the airport is gonna come up.
Yeah.
So you know the prices are going to increase.
Yeah.
So if you can buy something near Panvel, Pushpak Nagar, right, or you know, near Hiranandani and all of those things are there, and then the Adani is gonna come up. So if you buy land in any of the units, any of the properties,
Yeah,
or developers, so you can imagine that you will earn money more than anybody else.
Yes.
Not saying 50%, 100% done, but at least more than the market.
Yeah.
That's kind of structural inefficiencies that you can always exploit. Okay. Finally, they said the behavioral biases among investment teams क्या हो सकता है? Groupthink क्या होता है? You can see that they attempt to minimize the conflict and dissent from reaching. तो होता क्या है इसके अंदर? Once you reach to a conclusion, first either the person who wanted to contradict you would not contradict. Think about this. Let's say there are 5-6 people and they come to a consensus that okay, let's just do this. One person among those 6 has a contrary view. He would not speak up. But even if he speaks up and says, I don't like the idea, the others would say, look, we have now reached a consensus, let's not do it anymore. ठीक है? तो दिस लाइक अ ग्रुप थिंग. मतलब इट्स लाइक सपोज सबको जाने गतपुरी घूमने के लिए एक बंदा बोल रहा है गोकर्ण जाते हैं, वैसे चुप रहे यार, जा रहे, डिसाइड हो, फालतू मत बोल. ठीक है? Another one is the authority bias. ठीक है? The point is people who are subject matter experts, and you would also have seen that somebody, and I have seen this myself when I was in JP Morgan. I was the only one on the floor who was CFA, right? Fortunately, so whenever I used to speak, somebody said, "अरे ये तो CFA है, इसको सही ही पता होगा." Even though I could be wrong, but then they have a notion that he is CFA, so he is a subject matter expert, so whatever he's saying, it's right. So I can use that. You know, that's a bias.
Yeah.
Aversion to complexity. Obviously, the simple thing that they say is, जितना ज़्यादा simple है, उतना ज़्यादा easy है. Let's not make too much complicated so that others will not be able to understand what's going on, and then it will also be difficult to interpret and to take positions on it. ठीक है? So I'm saying that you would also experience that कि जब ज़्यादा चीजें complex है तो जरा अरे यार simple रखते हैं. Let's not complicate it too much. Let's keep it simple. ठीक है? So maybe a overcomplicated strategy could give you additional half or 50 cents or maybe 1% return. We still want to go with a simple strategy. Okay. Lastly, they talk about that when it comes to decision making process, so there are 3 things. The idea generation. Think about this. If you don't have an idea, of what you want to do, how will you do? You want to find that inefficiency. You should be able to see that inefficiency first. That's the idea, right? अगर inefficiency market में दिख ही नहीं तो करोगे क्या? So first is you should have an idea that this is what you want to exploit. ठीक है? Second, how would you implement? ठीक है? And third is the actual construction of how would you go about this. I can give you a simple example. I was talking to my sisters the other day and I was thinking कि the milk is being sold at 80-90 rupees, and then I got to know that there is something called as a Neil guy, right?
Okay.
This right has got a lot of these things, probiotic, etc. So I said, how about we sell this in the market? Now people don't have people have money, they don't have time, right? So there are a lot of people who can buy at 150 rupees per liter as long as they get the pure milk.
Yeah, correct.
That's the idea. How would you implement? Maybe you want to buy the cows, set up those things, right? Then the thing that you will, and then you will have to, if you're packaging, then you will need some approvals, etc. to start. And then how you actually go about buying a land, and then you will have to think about what if there is a disease to the cows, what if you don't get the right raw material, what if you don't get the market, what if people don't buy it, what if you do the packaging and then you add the preservative, you still do the same thing that others are doing, how are you giving them pure milk? Is you will also have to think about those things which will help you understand if you're going to be able to sustain your business or not, which means how are you going to react to change to different market conditions. Okay, that's about portfolio construction. Finally, it also says somewhere, it is not, I can't see it right now, but you will also see somewhere that although you do the portfolio construction, monitoring is very important. Okay, monitoring plays a major role, because no matter what you do, you will always have to see whatever I done and how could I have done better. Okay, to avoid any kind of uncertainty, stop losses are one of the best ways. Okay, where you think that if it goes haywire, if it goes south, then I should be able to exit the position. Then they also talk about liquidity. Okay, so liquidity, sometimes they say that liquidity plays a major role, because if something is, you should, this is very important, look at this. There should be an analysis of how much of the portfolio can be liquidated in 5 days or less, and as well as 10 days or less. Okay, so this is also very important, because when there are illiquid securities, the exit costs are high and there are high transaction costs. Okay? So you also want to understand that if there is some emergency and I need to liquidate my position, how soon can I do it, in 5 days or 10 days? That also gives you confirmation on how liquid my portfolio is. And I believe at least 10, 20, 30% of the portfolio should be in the liquid securities, so that if something comes up, you should be able to liquidate and get your money out. Okay? All right. Oh, as I said, portfolio monitoring, another very, very important tool. It's easy to do than done. Basically, it's easy to say that, okay, I've implemented this, but monitoring and seeing that whatever I thought is actually being performed or not is a very important factor. मतलब हमने सोचा था कि हम ऐसा करके करेंगे और हमने कर तो दिया, पर जो हमने सोच के स्टार्ट किया था बिजनेस की ये करके होगा, क्या वो एक्चुअली में हो रहा है, नहीं हो रहा है, it comes under monitoring. ठीक है? And if it is not happening, then it's a high time to understand where did it go wrong. Do I have to change the strategy, the way I was performing, or is there something wrong inherently in the whole business? Okay? Because there could be significant deviations.
I see.
We need to check that and take the right decision. Okay? Let's wrap it up over here. But it's just that I think another 5-10 minutes max it would go. Okay? And that's about it. They just talk about management fee, something that is easy to understand, but maybe another 15 minutes, and then we'll start with asset with real world management, whatever.
Okay. Perfect.
Okay, we'll do that on Friday, and then Tuesday we'll wrap it up.
Yeah. Thanks so much.
Okay.
Take care.